kick off, and I'll let you go from here. Are we doing Dana?
Yes.
Okay. All right. So I'll let you enter or
Yeah.
introduce him to everyone here. I'll move out of the way. Get some chairs for everyone standing.
So we have our first expert. We have Dan Nordqvist, and he's with Padgett Business Services. He newly acquired an accounting firm with his wife Sarah. So they do bookkeeping and accounting for small businesses.
Yeah.
And probably other things in there.
Yeah. Well, I wear many hats. So I say my wife is the one who takes care of most of the stuff because I still work another full-time job as well. And
Yeah.
how we got involved with it was Sarah was looking for a change, and she's like, I said to her one day, what would you like to do? She's like, I want to buy a business. And she was actually the one who found this business, so it's an existing business and practice. And all I can say is I think we're all learning just running a small business and all the things that go with running a business. And still doing, I think you wear many hats too in your role, so
Yeah.
it's interesting to have that change, but really enjoying it. We've known each other for quite a while now, and just talking about the star reviews, Janice helped me out on a bunch of different times for rentals and what to do, and so certainly feel free to reach out to her anytime to
Yeah.
rental stuff.
Yeah.
Yeah.
Well, first of all, congratulations on your business. That's super exciting. Many of you know I used to have a career in information technology as a business intelligence analyst. So Dan and I actually sat next to each other at Bell Alliant. I was on contract from X-Wave, and so I sat beside him there, and then we both moved on to a bunch of different things, but we both like real estate investing, so our paths crossed again, and I think you might have been involved with the acquisition that I did. I purchased a long-term portfolio from overseas. I think you were
Right. Yeah.
tied to that
Yeah.
a little bit. So that was kind of neat. So you just never know. So be nice to the people that you sit next to in the cubicle village.
Yeah.
So, and so you also have, so right now you've moved on, so you have a CFO role.
Yeah.
With a Bermuda company.
Yeah. So two CFO roles, but two related companies. So try to juggling all those things and go to Bermuda. People say going to Bermuda must be a lot of fun, but it's usually a lot of just work and no play. But I'll take it to get away in the winter.
I was gonna say that was a very strategic choice. I know in IT I tried to get myself sent to Bermuda and it just never panned out. Like, can I just go for 2 weeks? That's ideal, but it just didn't happen. I went to like St. John, New Brunswick and stuff.
Yes.
And when I lived in St. John, I went to Halifax and then Moncton the odd time.
Yeah.
But anyway, you're lucky.
But yeah, to your point with real estate, I do enjoy that. And when you, I was actually telling one of the gentlemen that I met that I was with Baker Tilly when you were looking at that overseas property. So, and for myself too, I've been involved with real estate, and in fact, the Bermuda one of the shareholders owns a property center. So I'm gonna hopefully get involved with that and sort of how you value companies, and whether it's, well, in your case, like property management or property. So it's interesting how it all kind of comes about, and real estate is certainly something that I enjoy doing.
Yes.
Both as an investor and obviously now from accounting too. So various capacities.
Yeah. So that's a perfect segue. So talking about business valuations, you wrote a book. Can you tell us about that?
Sure. So I call it sort of my COVID book because it was sort of pre-COVID that we started down the path. So when I say we, I co-authored with somebody from Dal, a professor there. But what we wanted to do was really not do a textbook. We wanted to do more of a practitioner's guide. So this sort of first iteration, because it's a smaller market here, it's actually a US-based book, but all the principles still apply. So any analysis and any valuation applies to that. this is really real estate focused, so even myself, when I go look at properties, I always tend to rely on the experts in that field too, so the people that are, their agents are there, because I can do valuation myself, but really getting a temperature on the market and finding out what the comparables are. So I really enjoy ensuring that I keep myself honest, so I always want to do that as well, because there's many factors that go into evaluation, and just because somebody's asking a certain price doesn't necessarily mean that it's worth that, so you have to take a look at a lot of different factors, and that was one of the reasons for the book, was just make it easy for people to understand the different ways to value a company. But I guess more specifically to real estate, like I said, it's very important to talk to somebody, not just valuation person, but somebody in real estate to get a sense for the market and what the comparables are in that particular area.
Yeah, so just in case anybody's interested, we don't have a copy of the book here, but it's called Small Business Finance and Valuation with Dr. Rick Nason and co-authored by yourself.
Yeah.
So that sounds really interesting to me. I'm curious about that for sure. And I'm curious about what trends you're seeing for people buying and selling businesses right now.
Sure.
Yeah.
So I can, for myself, actually, the business that we bought, we got through a broker, and there really wasn't a whole lot as far as different businesses to purchase at the time. And or now I had somebody else reach out and they were interested in buying a business for more passive income, and there's really pretty high valuations on businesses, and I think there's lots of buyers out there. But I would say in terms of, same as real estate, the interest rates have put a damper on some of those transactions actually occurring. But I think we're gonna see a lot going forward, a lot of transition of wealth, if you will, people wanting to sell their businesses, and there's seems to be a lot of demand for buyers for these businesses. And I think as we go forward, there'll be more and more of those transitions occurring.
Very cool. So, are we seeing like a lot of mom and pop businesses that have been owned for 35, 40 years? Is it something like that is there a lot of people selling because they're just retiring kind of thing?
Yeah, you see a lot, at least from my just recent experience, that seems to be a lot. Again, just drawing on the experience of the business that we bought, like they were ready for retirement, so they'd owned it for 30 years, and so a lot of people are doing that. There's also some, when you look at real estate, so a lot of people would come in and say, where do we pass it on to? So either it's like they pass it on to their kids, so they sell them, and so there's quite a bit of that happening. But I would say a lot of them is retirement. But yeah, from what I can add, lots of buyers, and probably less opportunities to get deals, if you will, unless you come across them on your own. So I was lucky enough to know the particular business broker that we bought our business from, and kind of knew where we could push a little bit on the price. But
Nice.
I don't know that when there's a lot of buyers that there's necessarily a lot of negotiation to occur. But what I do encourage when people are looking, whether it's a building or anything, looking at the value of it. So location, obviously, if I just draw the example of a business, so the one that we were looking at was a hotel, so good location, also newer building, and lots of potential for increase in revenue, but the person selling also knew that, so they're asking a premium for it. So it's hard to kind of find that a really good deal, and you might at the surface find that something's a really good deal, but you want to make sure that you look at factors like if it does involve real estate, is the real estate in good condition? Are there a lot of assumptions in how they've come up with their valuation? So if you're buying a building that also has a business attached to it, are there a lot of assumptions that have gone into getting to the price that they are? Then you want to be careful that you can vet all those. Same as, I guess, again, bring it back to rental properties.
Mhm.
Are they really, if they say, yeah, we're under market for the property for rentals, but are you actually gonna be realizing those when you buy the property?
Right.
And or how much work are you gonna have to put into the property? So, and where's the location? Are you gonna be able to rent it at the rates? And depends on your time horizon. I mean, real estate, as you guys know, it's a long game.
It is.
So, but if you buy too high at the same time, then it's gonna be hard to.
It's gonna be a longer game.
Yeah, it's in the longer game, yeah. So,
Just a couple more quick questions on the valuation in businesses. What is, and I guess it could be applied to rental properties as well, but what's the number one thing that you look at when you're determining if a company is valued correctly and a good deal?
yeah,
Location, if there's real estate involved,
sure.
and then how, like, the numbers, like, how did you figure out for
Yeah.
the business that you bought, like? that
Sure.
is-
Well, first of all, starting off, I would say evaluation is more of an art than a science, because there's a lot that go into it and a lot of assumptions that go in, so I kind of look for, what are their earnings, are there consistent earnings? So that could be a real estate, but it could be a business on how they've done over the last few years. So if you're seeing a lot of fluctuations or a lot of, what I would consider kind of, additions or subtractions to the income statement. So are there a lot of sort of questionable expenses that could maybe be personal in nature that you can't really figure out, I guess, the pure earnings of the business. So I like to kind of look under the hood carefully before I make a decision. So if the deal seems too good to be true, it normally is. So you want to be careful that you look through all the different factors. So I think just keen eye on the details of it. And 'cause I'll reiterate again that if there's somebody that knows the industry more, so I will know different valuations of different businesses, but if you're looking at real estate again, I would, encourage to look at somebody who's in that game as well, just to make sure that you're getting the value that you're paying.
And on the flip side, if you're looking to prep your business for sale, what should you be focused on to make it attractive and to get the highest valuation possible?
Yeah, so if we look, again, all related to real estate, so making sure that you have a property that shows well and that you've invested into the property and trying to have those consistent earnings over the last number of years is important. And as well, getting the rental values up to where they are, because people will question and say, well, you're under market for your tenants, are you really gonna be able to get what you're showing on paper? But again, it's some people are wanting to get a deal, so sometimes it's a trade-off. So I know for myself, selling one property, I knew I was gonna have to put a lot of money into it. So was I really gonna get return on my investment in the short term? Probably not. But I also knew I had rezoned the property, so that brought additional value to the property. So it depends on where your end game is, and if you're really, I guess, for my family, my dad at one point, one of the buildings, he was just really tired of the property, so he said, I'm willing to take that risk and just be done with it and sell it. But I would say, yeah, getting the top value, you want to make sure.
Did you sell it?
Oh yeah, this was years ago. I know, this was years ago. This was probably 10 years ago.
Yeah.
He still has property, but that's something to keep in mind, that when I realize that you want to try to get as much income that you can and grow your portfolio, but don't forget to keep upkeep on your property. Like, I know, again, drawing on my family, my dad's like, oh, I'm gonna have to spend all this money. I'm like, well, look at what you've taken out over the last some years. Like, there needs to be capital reinvestment to keep your property, unless you're then planning on just selling it. But he's not. He wants to hang on to his property. So.
Oh my God, that's cool. I didn't realize your dad invested as well.
Yeah, so that's really how I got involved, and how I got involved with sort of property management and also some construction. Oh yeah. Well, we talk about tenant horror stories. I can tell you many.
Yes, I can tell us you too.
Yes.
You're very colorful.
And sometimes you don't know, like, when you talk about, you tried every step to, and they all seem nice when they move in, but sometimes it's just very hard to, just to see that at the beginning, so.
Absolutely. Can you explain, we'll shift gears a little bit, well, sort of related to repairs and maintenance.
Yeah.
The difference between capital improvement and repair and maintenance on rental properties on
Yeah,
tax
sure.
returns.
Yeah. Again, I'll draw an example of myself, because I wouldn't say I got in trouble with the CRA, but I got audited, because they were questioning why I showed a loss on a particular year, and we ended up having a flood in our basement, and long story short, we had a big argument with the insurance company, and the insurance company won.
Oh.
So we had to invest money and to fix up the place. So what I would say in general is, if you're fixing it to bring it back to where it was, typically you want to capitalize those expenses. But it also depends, like, to give one example of, if you're replacing carpet with hardwood, then maybe you can think about maybe that is a capital improvement depending on the cost. And also depends on what you're doing with the property besides those renovations. So if it's, if you're doing windows, if you're doing complete renovation, then those would typically be capitalized. Same with sort of if you're just repairing a roof and it's not costing that much money, then that would be more of a maintenance and repair. But if you're replacing, say, even half the roof, one could argue that's capital, because it's extending the life more than a year.
Okay, so for that example, if, like, Greg and I are looking at the scenario, repair versus replace the whole roof on a house that we own.
Yeah.
So if we repair the whole roof or replace the whole roof with a new roof, that's capital improvement.
Yes.
And then what happens? Like, how do they look at it differently? Like,
Yeah, so it would go towards your building. So if you had, I'm assuming never assume, but you have a building and you have the land sort of split out. So it'll go towards the building. So let's just say the property is, the depreciated value is, say, 200,000. So if you had a roof of 20,000, then that would be added on to the 200, and then you would depreciate that over the period of life of the roof. So you would probably create, depending on the size of the property, you would probably create a different category for your roof, and then depreciate over that period of time.
Okay.
So, but I know some people are kind of saying, well, should I really depreciate my property? Because then you have a big, potentially bigger capital gain at the end. So that's what some people do. Like, yeah, you get the savings in year if you depreciate your property, but you don't have to. So it just means your capital gain then when you do sell the property is gonna be less. I know some people are always, they want to depreciate the property because they want to get that expense in that year, the depreciation expense. But some people will keep it in there until they sell it. So it's a bit of a gain, but at some point you're still gonna pay the tax. So it's do you want to pay the tax now or later?
Does anybody have any questions about that?
Yeah.
I do. Just, have you done any research or seen any advantages in terms of owning a property personally versus corporation? In terms of capital gains, for instance, at the sale?
Yeah, capital gains, yes. You can see some differences, and it depends on your size, like how many buildings that you have on there. So
Let's just say had one or two.
yeah, one or two.
So small portfolio.
It's not going to make a big of a difference, but if you do have a sizable portfolio, then it might make sense to have it in a corporation to shield some of that.
Both be sizable.
Well, if you had, I would say
You
more.
have a liability issue too, right?
Yeah, exactly, yeah. So if you have probably more than 2 or 3 properties, let's say, then start getting up there, you may want to look at having a corporation. So it's probably a good segue into our tax they'll probably be able to answer that question in more detail, than I would, but.
Yeah, I did have a question about, are there any tax credits or deductions currently available for real estate investors that you know about?
Yeah, so there's one that, we were looking at the other day, so this was for a restaurant, but it might apply for apartment as well. So it's a clean, I'm trying to think what it's called, a clean air tax credit, which you can apply for, and so it's essentially a ventilation, if you improve the ventilation of the building, then you can apply and get those, get a tax credit for it.
Would heat pump qualify for that? Because it's moving the air,
Yeah, that's a good
Right.
question.
And there's
and it's
separate
filtered.
programs.
Yes.
Yeah.
Yeah, that's a good question. I know for restaurants, in that particular instance, when we looked at it, they are, because it's a moving air out of the building more efficiently. So potentially.
Cool. And I think, Jason and I will probably get into, when he comes up, more into the partnerships and all of that, the corporations. But I'll ask you, the final question I'll ask you is, what records should we be keeping, for rental properties?
Sure.
Yeah.
So I would say in general, any expense that you have that are pertaining to getting a sort of value out of your property, you should keep a record of. Because anything that's used to kind of earn that income, keep a good record of that. So what's, reasonable expense that you use to earn. So if it is like traveling back and forth to your rental, so the gas, as an example, keeping track of that you can deduct that portion that's used to travel back and forth. Now, your own labor, if you're doing your own maintenance and repairs, is not deductible,
Yeah.
unfortunately. But anything that you hire somebody, you can deduct. But yeah, just keeping a good record of it, and that's what I did when I got audited. I had all the papers to them, so I was able to send that off to them and what it was and the details of what had been done.
Yeah, that probably relieves a lot of stress.
Yes.
Yeah,
Yes.
and also your financial knowledge.
Well, when you get the letter, it's like you have to respond by so-and-so, and that's would be my encouragement to you. If you do get a letter, like, don't stick your head in the sand. Do respond, and just talking through it sometimes will clarify what they're actually asking for, and it's typically not too bad in my experience, but depends. If you ignore them, then yeah, they get a little
They don't like
nastier.
that.
No, they don't like that at all.
But CRA is going on strike, eh?
Yes, actually, yes.
I'm going on strike too.
Yeah, that's
Not
right,
paying.
yes. More money, yeah.
Oh, amazing. Well, Mike's got a question.
So when you were talking about evaluating properties and you going back in time, how far back do you go? And is the most recent numbers more, given a higher weight?
I would say it depends. I would go back probably 2 to 3 years just to kind of see what the earnings have been. And then I will also look out, not just the current year, but I would do a projection out. So if they're saying, yeah, we can get, I don't know, pick a number, 500 more for this particular unit, and these are the expenses that we should normalize for, I would look out, out into the future as well to see what those earnings would look like, and is that how they've come up with the value? And I would put more weight on the more recent financial information.
So pro formas have an importance then?
Yeah, pro formas do have an importance as long as, your assumptions are not too wild and crazy. That's the problem with people that, they think their properties or business are worth more than they really are. Are your assumptions, can you validate them? Are they ones that you believe in? And again, that's, then getting another opinion from somebody to find out, are they really realistic? Because that's what people run into. They think they can, grow their revenues by X, but really it's those synergies sometimes is either they're not realistic or they're taking a longer time to realize. Again, it's too, when we look at real estate, it's really, interest sensitive too, so you're gonna pay a lot more interest now than it did sort of a year ago when interest rates, were lower, so that impacts that as well. Again, depending on how much of your own money that you're putting in, but you also wanna get a good return, on, if you're putting in lots of money on your own, you wanna make sure you, cause you're tying up your own money, so.
Thank you.
No problem.
Well, thank you so much, Dan. For anybody that's interested, if you wanna give Dan your business card after, he's gonna be drawing for a copy of one of his books. If you don't have a business card, you can grab some paper and introduce yourself to Dan and have a chat. He won't spam you, I promise, he's too busy for that. Awesome, okay, well, thank you so much.
Thank you.